I'd like to thank everybody for joining me today. Today, I want to talk about an interesting topic, and that's premium finance. Premium financing is a great way to leverage your money, leverage our estate exemptions, but it's a tool that we can use for a lot of our clients, and probably for a lot more clients than you're even thinking about. A couple things that I want you to understand when we're looking at the concepts. Number one is leveraging money. Now, if you think about this, think about if you're going to go buy a house today and you have the ability to pay cash or get a loan. What do most people do? Most people are going to go ahead and get a mortgage. Even with the interest rates of today, they're higher than they have been in the last few years. And people will still go out and get that mortgage because they want to keep their money in their bank account. They want to use the bank's money to buy the house, and they're using leverage. You can do the exact same thing with life insurance if that fits your situation. The other nice thing about premium financing is we're creating the opportunity for tax deferred growth in the life insurance policy, and we're using leverage money to do that. So those are great concepts to be able to put together. So it really comes back, what is premium financing? And there's really two ways I look at this. One is bank financing. We're using other people's money. We're using other people's money to pay the life insurance premium. And so there again, does it make sense for you to use other people's money to pay those premiums? Also, we look at private financing. Private financing is you're going to use money from your business, maybe a captive insurance company. It may be something that, we have mom and dad funding their estate planning insurance inside of their irrevocable life insurance trust, but we're using financing so that we don't have to use up estate exemption. So you look at these and the transactions are similar but not identical. And so we'll want to understand how those work out. So take a step back. Who is premium financing for? Well, for the longest time, it was just for high net worth clients. And high net worth typically meant an estate plan or an estate value of at least $5 million and, significant income. Now we start looking at the Henrys of the world. High income earners, not rich yet, Henrys. These are people that are earning as reasonable, good salaries, good income, but they don't have that high net worth estate yet. Henrys are a great group to look at for premium financing because they're in growth mode and they're using their money to continue to grow their estate. So wouldn't it be better, or wouldn't it be nice to be able to leverage other people's money in this case? For both the high net worth and the Henrys, look at all the different concepts and strategies we can use premium financing for. We can help them with their retirement if we want to leverage those retirement dollars inside of a life insurance policy and use premium finance to do that. Typically, we see this a lot in estate planning and key man and buy sell planning. And there again, it's where it works great in key man and buy sell. We have a company that is using their money to grow their business, grow their revenue, and they're looking at it saying, can we use other people's money? Does it make sense? And in a lot of cases, we have clients that are used to borrowing money. There again, we use the example of buying a home. But think about a real estate developer, if that's their business. Well, they're always out buying more dirt, and they're using the bank's money to go buy that dirt with very little amount of their money tied up in the transaction. You see a lot of businesses throughout the year get a line of credit. Why? Because they have the ups and downs of the business, but there again, it's costing them maybe 6, 7, 8, 10% to borrow the money from the bank, but they may be getting double-digit returns on their business investments. So there again, it's looking at how do we fit this in? As you think about this, what is premium financing? So premium financing can get very complicated if you allow it to get complicated. So break this up into three very distinct transactions. Each of these stand on their own when we're going through the premium finance process. So number one, it's the application for life insurance. Okay, take a breath. These are bigger policies. So our life insurance underwriting is going to take some time. But that's a standalone transaction, just like every other, high dollar life insurance policy. This is going to, go through the underwriting process required by the insurance company. They will ask more questions because we will disclose that it is going to be a premium finance situation. Now you're going to have a banking transaction. You're going to have that application to borrow premiums. If you're using the bank, you've got to go through their lending process. Most of that goes fairly quick. The banking transaction will go much faster than the life insurance transaction, but do it as a standalone process. And finally, what additional collateral is the bank going to require? The bank, in most premium financing cases, they are 100% collateralized. They're going to want liquid collateral, and we're just going to have to address that however it makes sense. Now let's come down to the next part. Who is the lender? Well, as we look at it, if we're using other people's money, we're looking at a bank. And if you've ever worked with a bank, banks are very strict, very regimented in how they take you through the process. There again, do we want to use other people's money? Is that the best move for our client? We can also use our client's business. And if you've been in the business, you've heard split dollar. Split dollar is where we have the business paying for it. We have the employee or the owner getting the benefit of the policy. There again, it looks very similar and it acts just like a loan. And it is a loan. So we just, there again, throw it in the premium finance world and address it that way. We can have a captive insurance company. And that captive insurance company, if we've set up that transaction for our client to save them money to address their risk, there again, it's a great place to go borrow money that is sitting there ready to be used for the client. And I have others because we can go out in an estate situation and use mom and dad. We can use grandma and grandpa. Let's don't limit where we get the money from. Let's just fit it into the transaction so it works best for our client. All of these lenders are great. If we're using the business, a captive, or personal, we're going to be able to drive that interest rate down. And we've got related parties here. The minimum interest rate is going to be the applicable federal rate. There again can be short-term, mid-term, long-term, depending on how we set up the note. But it's a great way to move assets or move money from one person or entity into the life insurance transaction without using up gift and estate exemptions. And so high net worth, this is a great tool. Even though we're in a high interest rate environment, can still be very, very good. The bank interest rate is just whatever the bank's charging today. There again, it's a fully collateralized loan, so we should get very favorable terms. But there again, high interest rate market, that's where we're at. Finally, we get to the end. When we're designing this insurance, we have to have an exit strategy. And the insurance company typically wants us to look at multiple strategies to exit this. Death is always an exit strategy. Now, if our client always dies on schedule, this will look incredibly awesome for that client's planning. But we want to look at how can we exit the premium financing other than death. So we're going to look at how can we pay off the loan from the cash value? Can we pay that off from other assets? The insurance company in a true premium financing case will want us to identify how we can pay that off other than death. And from a pure planning standpoint, we want to know what the exit can be. So our client can plan for the future, understand the flexibility here, also understand what handcuffs they're putting on before they get into the transaction. So there again, premium finance, great strategy, great tool. It's just another tool that we have to help our clients to be able to pay for their life insurance that they already need. Now we're just finding a better way to pay for it. If you have any questions, feel free to reach out and we'll talk again next week. Thank you.